Okay, so today we're going to learn about the 5-step trading process, the step-by-step method that you will use for trading. Okay, now this is ideal for beginners because what is happening is you guys are probably looking at YouTube and other videos to look for trading information. Okay, you want to start trading and there is a certain specific way to approach every trade that you're going to be doing. Okay, so I'm going to elaborate those. The problem that happens is online the information is so unorganized that you don't know which should come first, which should come second. Okay, so every video has got its own set of information that you're going to be looking at, but which comes first, what do you do first, what do you do second, and so on and so forth. So I've broken down trading into a simple 5-step process which can be like your workflow every time you're trading, and it doesn't matter what kind of instrument you're trading with. It could be stock, it could be options, it could be futures, commodities, whatever that you trade, the process should be exactly the same. The only difference is I am focusing on equity because I personally trade in equity. That's why you will hear me say the word equity all the time. But in general for trading, this is exactly the process that more or less everybody follows. Okay. So what are those 5 stages that you look for? First one is to screen. Second is to find the trend. Then we are going to be looking at levels, and finally we'll be also looking at candle, and last but not the least, trade management. Okay, so I had made a 1-minute video which is already there on my Instagram feed. You guys can check it out. This is more expanded version of the same. So let's look at each step and the importance of all of them one by one. Okay, first is your screen. By screen, I mean screening of stocks. So here what we do is we use technical filters and find trending stocks with volume. Why is that important? Okay, the stock market is a vast place. There are almost 1500 stocks on NSE and more than 5000 stocks on BSE. Which ones do you choose for trading? Okay, if you take all of them, obviously that's not possible. So you need to filter out, you need to have a certain filter to just take out a few stocks on which you can focus on a daily, weekly, or maybe a monthly basis whenever you're trading. Okay, so that you don't have too many stocks to look at and you're not overwhelmed. At the same time, not all of them are going to give good results to you, right? There are only going to be certain stocks which are going to show exact movement that you need to make those profits. So you're going to use technical filters to automatically cut down most of the stocks. Okay, a good part of decision making is to cut out all the bad variables, and you're going to be cutting out a lot of bad stocks by screening using technical filters. Okay, what you want to look for is particularly trending stocks, stocks that are in flow right now. Everybody's talking about them, the ones that have got all the speed and momentum, and that's why I recommend using ADX to find those stocks. What is going to happen, since they are already trending, everybody is jumping onto those stocks. If you place your trade in those stocks, you have higher chance of winning. That's why look for trending stocks. Second, you want to look at large market cap stocks, not small stocks, because what happens is when technical analysis is used, it is used to find out psychology of investors. Now, in smaller stocks where there is very little volume or very little amount of buying and selling happening, the technical analysis is not going to work as well as something in a large cap, because we want as much data as possible. So the more number of people are trading a particular stock, the better your technical analysis can work on it. And that's why large market cap companies, at least above 10,000 crore is recommended, so that whatever technical patterns or indicators that you're using, they work really well and you also have a good chance of winning in them. And very important, if you have something of a stock which is already in news and there's a lot of talk happening, obviously more and more people are going to be interested in those stocks as well. That's why those stocks can be filtered out as well to just focus on trading. Okay, mind you, this is just step number 1. What are we trying to do? If I have to give you a non-market example, this is the fishnet of a fisherman. Okay, not all fish are eaten. So what do I mean by that? If you were a fisherman, you would go into the sea and you're going to cast a big net. Okay, but there are millions and millions of fishes in the sea. You're not going to catch all of them. You're going to catch a few in your net first. That is the step 1. But once you cast the net, obviously you're not going to eat all of them. You're going to be segregating different kind of fishes amongst that net. So your screen is like that big net. in which you're going to collect a few stocks, out of which you're going to still do some segregation so that you only eat the best fish. What do I mean by that? You only select the best possible stocks with the highest chance of winning. And that is the process of screening. That's all. To filter out maybe 10, 20 maximum stocks out of hundreds and thousands to focus on, so that you can study them, you can find your better patterns or indicators within them. Okay. Now, how do I do that? How do I recommend doing that? You can use any one method. By the way, there is a free training that I just did, and its recording is available for free for everybody in the description of my Instagram feed. Top 3 ways to find stocks for trading. I have given all three of the methods that I use regularly to find out stocks for trading. Okay, so if you have not downloaded it yet, you can go to my profile. Just link is in the bio. You click on it, you'll be able to download it for absolutely free. Now, this was usually a part of my class, but now I've just given it as free because I want more and more people to know about my training. Okay, so use any one method. Okay, you don't need to use too many of them. That is also something what confuses a lot of people, and you will hear me say this again and again. You do not need to do a lot of filters. Okay, you just need to have some basic 2 or 3 criterias so that you get 10-20 good stocks in your list. Okay, and also you don't need to use hundreds of websites. I'm going to give you option of 4. You can use just one. I have been using only 2. That too on and off. Either I'll use one of them. I don't use both of them at the same time. So first one that I recommend is charting.com, which is very, very easy. Then investing.com has also got very nice screeners, very simple to use, easy to use. So for this you don't need any money, it's absolutely free. You select the criteria and you will find charts. You can directly get the charts as well, so you don't need to worry about finding just stocks and then opening them in some other software. So that's what I like about charting and investing.com both. And if you've been using TradingView, then investing.com has got exactly the same interface, so you will have even easier way to analyze the charts as well once you have those stocks in your list. Okay. And of course, there's always Money Control for news-based stocks. You can definitely check Money Control has got various filters from volume shockers to stocks in news, whatever the kind of stocks you want to find out. Money Control is definitely there. But I will again warn all the beginners. Okay, just because Money Control is a reputed website doesn't mean the recommendations on that website are for you. Okay, you have to be careful. Use Money Control for analysis, not for recommendations. That is something which I always tell all my students, because it is very easy to get carried away and you think that they are experts, but that's not always the case. Plus, you're a beginner and the person who's giving recommendation may not be giving advice at your level. Okay, so that's why Money Control, use it only for analysis, and it's a good source of information for market stocks. No doubt about it, but don't take the tips on it. Okay, don't be lazy. Be on your own. Find your own stocks. Okay, develop a strong mindset of finding your own stocks. And of course, finally, this will be incomplete if I don't tell you that your own broker platform like Zerodha. I personally use Trade Tiger by Sher Khan, which has got an excellent filter. So I use that filter all the time when I'm trading in shorter term time frames, because it's very easy for me to navigate and then click on open the charts, and I can trade from that chart as well. Okay, so again, make sure that you have any one which is fixed and you use it regularly. I would say run your screener at about 8 a.m. in the morning or after 4 p.m. Okay, so that you have a group of stocks that you can focus on and then trade from within. Okay, so in the comments, if you're listening right now, just let me know what broker are you using, or are you using charting.com or any other website to screen stock. If you're using it, type in that name so that I know you guys are already using some of the information that I'm going to give. If not, that's okay. You guys can just select one from here right now and start using it in the future. Okay, now let's look at step number 2. Second step, again, a very crucial step in any form of trading, is trend. Okay, not only momentum but direction is also important. What do I mean by that? Simple. Okay, by screening the stocks, you've already used a lot of momentum, the stocks that are already in movement and they are trending and they are active right now. Okay, so but we also need to know in what direction are they acting. Okay, And since in stock markets and especially in trading, you can take two positions, okay? You can take a long position and you can also take a short position, okay? Also, if you want to, let's say, use a call option or a put option, in case you're trading in options, you need to know the direction very, very clearly. And that is why determining the trend of a stock is extremely important, because this gives you that advantage of being on the right side of the trade and higher possibility of hitting your direction, okay? So if you're going short, you should know that the stock is bearish. If you're going long, you should already know that the stock that you're buying is bullish, and so on and so forth. That's why after filtering out stocks, clearly look on the charts of what direction is this particular stock going, okay? A very old Hindi saying is that "Behti Ganga mein haath dhona aana chahiye." I know I'm giving examples from sea and river, but the idea is very simple. If you're going to be going into a race, okay, and that race is happening in a river, do you want to trade, you fight against the river and keep rowing your boat, or do you want to go along with the force? If you go with the force of the river, obviously you're going to get that extra push, get that extra mileage, and you'll have a much better success rate in that particular river race as well. So Behti Ganga mein hi haath dhona hai. You are going to be using the same direction in which the stock is going and place your trades accordingly, okay? Now, how do you do that? How do you do that? There are many methods. Again, do not get confused. Use any one method. There are, again, I would say there are 5 to 10 methods, but I would give you the 4 major ones that you can use, out of which just select one. Why? Because everybody is going to have their own personal view. The way that you look at chart is not going to be similar to how I look at charts. In that case, you have to start developing your own style, okay? Because trading is a very personal thing. It's a very individualistic thing. Fine. So what are those 4 methods? First one, simple visual inspection. You're going to look into the charts. You're going to see higher high, higher lows, left to right. Which direction is the stock going? The moment you see that, you will have a very clear sense of the bullishness or bearishness of a stock. Or in case it's a sideways trend, you can also detect that as well. So just look from your eyes, look at the chart, probably take a step back, and then see if the direction is clear to you. If the direction is clear, only then there is a trend, first of all, okay? Don't try to force your analysis on the trend. If you see it clearly, then it's there. If you don't, then leave it. The other way that you can use it is moving average can be definitely used. Okay, in moving average, there is a small line that is drawn based on mathematical average of the price on a moving day basis. That means if you have a 10-day moving average, that means every 10 days worth of price would be added and then made an average into, divided by 10, of course, and then that line is plotted. So you might have seen those lines on the chart. It is very simple with moving averages. If the price is above its moving average for that particular period of time, it is supposed to be bullish. And if the price is below moving average, that means for those particular number of days, the price would be bearish. It's as simple as that. Okay. If you want to take it to next level, sometimes what I give in my Nifty live analysis weekly is that moving average crossovers can also be used. For example, if the shorter moving average, let's say 20 EMA, is crossing over 50 EMA, that means on 20-day period the stock is bullish compared to 50-day period. So that overall trend is bullish. If the crossing is happening on the opposite side, that means 20 is going below 50, then we have bearishness coming in for the next 20 period compared to the 50-day period. Okay, and these kind of crossovers can also be a very simple and obvious way of finding whether the stock is in bullish trend, bearish trend. And of course, with moving average, if the stock is struggling within those bands or crashing into it, then obviously there is no trend in it. Okay. A side note, if you have seen MACD on the bottom of the chart, MACD indicator or MACD histogram, that exactly uses moving average crossover divergence. Okay, moving average is coming close and separate. So that can also be used. Of course, finally we have some indicators that can be used to find trend as well, because indicators show certain trends as well, and price tends to follow that behavior. But I personally do not use indicators to find trend, because I can simply look at chart and it's easier for me. But that doesn't mean that indicators don't work. It's just that that is not my style for finding trend. Okay, use your own style. If I have missed any one style that you use, you can put it in the comments below. How do you find your trend? Okay, let me know in the comments below. I would like you guys to participate so that you remember, you have your clear trading process as well. Okay, step 3 is to mark your levels. Marking level is important because first of all, let's just understand what exactly are levels. Okay, levels are important psychological turning points. Okay, you might have heard of these terms like round numbers being spoken about of Nifty level this, level 10,500, or you might have heard of terms like support and resistance. These are nothing but points where price shows some kind of reaction. Okay, so a support is a place from which price changes the direction from down to up. Why? Because below that price, most people are not willing to buy that security. Okay, similarly, people are actually more interested, so they start buying it above that. Similarly, when it's going up, on the upside, if there is a level which is resisting the price, that is known as a resistance. Okay, and people are not willing to pay more than that. Okay, on the high side, so that is going to be our resistance. So these levels are basically places where people have their presupposed target. Okay, and why is this? Because again, we are human beings who are trading in the markets. Even big companies which have invested in the, let's say, FIIs, DIIs, all of them have certain rough idea of where they want the price to be to exit from their particular stock or commodity. So on that price, usually most number of people will act, and historically also we will see that certain prices are more comfortable for a certain type of stocks. Okay, and these levels when marked will give you priceless information. Priceless information in the sense, now you know where people are going to be reacting. Okay, so you will find all kinds of patterns and setups right here once you start drawing these important levels. Okay, you need at least two, one support and one resistance, to understand where the price might go in the future. Okay, and that is why you will also, of course, once you find the patterns and setups around that level, you will see easy high probability entry and target points. Okay, because now you know most people are going to be entering at this support level, so there is a high chance that the stock might go bullish, so you can start taking your position accordingly. And then you know that upside there's a resistance, so you can keep that resistance as your target. Okay, even in fact, once you draw levels, let's say you're trading with classic chart patterns. If you are looking at a rounding bottom or a head and shoulder, you need that neckline for that. You need that basic level from which that pattern is forming. So once you form these levels, these patterns will start emerging. Let's say you're trading a speed break or flag pattern. You will see that between two lines, the stock is kind of trending in a range. So that there you have your other pattern. So all possible entry points are again clarified once you start drawing these levels. And that becomes a step 3, important step into finding where to put your entries and exit. Okay, now if I were to give you a simple example, think of them as bus stops. Okay, a bus is going very fast, but if you want to enter that bus which is going in a direction that you want, you will have to first wait for it to stop. So support and resistance become those important bus stops where you know most buses are going to stop. Okay, and then you can get in. Plus your destination is clear, so you know the next bus stop, which is your next level. Okay, so that way when the price is traveling, support resistance become their own simple bus stops in which you can get in and get out with the right kind of direction as well. Okay, and of course now there are hundreds and hundreds of methods of finding levels. Even if I say so myself, there are many ways. Okay, because each method has got more advanced and refined versions. But I'm going to give you a couple of them which I have used and I have succeeded in. Again, as I've mentioned previously, you don't have to think of any one better than the other. Okay, there are people who claim this works better than that. It's just that it works better for them. It's not necessary that it works for everybody. Okay, so you can use Fibonacci, which is basically a very simple extension that you can draw, and you'll see that usually the retracement of the price happens at certain ratios. Okay, Fibonacci was a famous mathematician who discovered this in nature, and then of course people who are in the markets had to apply that in markets as well, because we are human beings, we also follow nature and more or less. So a lot of times 50% retracement is again a very important Fibonacci layer. Okay, although it's not officially a Fibonacci number, but 50% retracement is a very obvious support or a resistance. So you can definitely use Fibonacci. That is one thing that you just have to draw those, connect those highs and lows, and you will have your levels ready made. Okay, so that you don't waste too much time and you can detect the levels easily. Another easier way of finding levels is pivot points, which is a mathematical calculation. Now again, there are many types of variations of pivot points, but I recommend the classic ones. You can use those and you will see mathematically drawn pivot points. Those are levels R1, R2, R3 and S1, S2, S3. As soon as you put that formula, you can find it in Excel. Most of the softwares will give it to you directly as well, okay, on your chart. So I think in TradingView you've got it for free. On Sharekhan, I know it's a simple setting and I can just place my levels automatically. Okay, but of course the classic ones, which again train you to become a better chartist or better technical analyst, are understanding highs and lows, places where price has changed. Okay, once you can mark those, nothing like it. Okay, of course, as mentioned earlier, even moving averages work really well. Bollinger's band works really well, and nothing beats classic round numbers like 500,000. So all these methods are valid. Okay, choose your own method, whatever you've already used. Let's say screening using ADX. Then you've already seen your trend based on moving averages. Now since you're already using moving average, it also makes sense to use moving average as support resistance as well, and that becomes your step 3 automatically. Okay, and then you can start now looking at where the price is now going to turn. Okay, once you have a trend direction, you're going to go to the next step. Okay, so now in the comments, could you guys just tell me if you have used Fibonacci or pivot points or any other method to find support levels, or you do not use support levels at all. Okay, if you don't use support and resistance, I would like to know. Just put it in the comments below if possible. Now, the next step in trading process, once you have found out your you've screened your stocks, then you have got your trend clear and your level is clear, and you have got your final confirmation. Now don't just jump onto the support and resistance for finding a trade. Okay, you need to find a clear candle confirmation. Okay, this is where classic candlesticks come into picture. Now why do I love candlesticks? With one candle you can see candles show direction, strength, volatility of one day in one complete session. So all of this information is always available in one single candlestick. Okay, so whatever has happened, you can get a quick snapshot of that entire trading session, whether you're trading on a 15-minute chart or a weekly chart. Okay, entire trading session is captured in one candle, and that gives you a lot of clarity on what is happening at that support. Okay, or that level of resistance as well. Okay, so I personally feel candlesticks are the ultimate indicators, which are right there in front of you. They are big, easy to detect. The patterns, once you start recognizing them, are very easy to detect on chart as well. Okay, so they are not complex, but they are very powerful as well. Okay, so they give you a clear idea of whether the price is going to bounce. That means, is it going to change direction from that level, or is it going to break or cut through that particular level? Okay, when we are trading breakout charts, that means we are looking for candles that are breaking levels. That's why candlesticks are important. And we are looking for reversals, then we are looking at candlestick reversals, where the price is taking changing its trend in a short term. Okay, so depending on what kind of trading style you're following, the candle will give you a very clear signal of buying or going into that trade, whether you want to buy option, whatever. The final trigger for trade is your candle. Okay, I compare candle to the trigger of the gun. Okay, you're going to be aiming, that is your direction, and your line of control is your level, and you're going to be waiting like a very nice sniper or a person holding a rifle. The moment you see candle, okay, you see a candle breakout with a good volume, or maybe you see a proper candle reversal, once it's confirmed, you're going to pull that trigger. That means you're going to go into that trade. No more analyzing, no more thinking. Once you have confirmation, this is when you start executing your trades. You place that buy order, you place that short order, whatever you prefer. Okay, and that's why you're going to look for some obvious trading signals from candles as well finally to enter. Now, you don't have to go crazy. There are more than 30 patterns, and if you go on the internet, each pattern has got different names as well. So it will get very, very confusing very fast. Okay. Candlesticks are not magical. Okay. Once you use all these methods together, still there is going to be some higher level of accuracy, of course, but they are not going to be 100%, and no method is going to be 100%. So stop looking for that perfect candlestick pattern. Okay. Use the classic ones. They're going to be coming again and again. You will start seeing that some of the patterns you personally feel connected to you, it's easy for you to detect. For example, when I started with hammer. Hammer was very easy to detect. Okay, once the condition was met, I was able to trade on it as well. So whatever, use 4 or 5 candles. You don't need more than that. Just make sure that you master those 4 and 5. Okay. It could be a doji. Doji is a very simple plus sign. Hammer, as I mentioned, is a strong reversal signal. Then big breakout for pattern, which again, a pattern breakout is something that you cannot miss. It is so obvious that you cannot miss. So you don't need to analyze too much in that. Once that level is broken through a big candle, broken down or up, depending on what direction you're trading with strong volumes, you have your entry signal ready. And of course, there is engulfing and harami. Both are excellent patterns. They are again formed again and again on moving averages or on pivot points or Fibonacci levels. Once you have that, you have a clear-cut signal to enter. Okay. So I want you guys to know, of course, if you have a indicator that you're using, that is also fine. Okay. This is not to say that only candlesticks work, because I've been seeing a lot of this on YouTube, a lot of comments that I'm getting, and that this works and this doesn't work. It's not that true. All of them have got a certain level of accuracy. Okay. I personally prefer candlesticks because you cannot miss them. Okay. With indicators, especially with beginners, it might come to a conclusion where it's a smaller signal, so you may not be able to detect it or clearly see it. But a candlestick, something like a breakout candle, nobody can miss it on the chart. Even a 10-year-old child can see and find candlesticks, and they are very simple pattern. The color is very clear. That's why I'm recommending candlesticks, not because they work better than indicators. Okay, so let me be very clear. I also use indicators sometimes in certain situations, but I will always look at the candle that is happening so that I know what happened in that trading session. Candles have been there since 16th, 17th century from Japanese rice market, and the fact that they are still there is the fact that they work. Okay, do they work better than others? I don't know, but they definitely work. But you have to use a lot of other technical indicators to make them work according to you. Alright. So this gives you a very clear entry. Of course, below the pattern you can also find, based on candles, you can also find your stop loss. Okay. And again, if you guys are using candles, please put it in the comments below. Let me know if you have used candlestick as an indicator ever. Okay. Let's go into the final point, which is trade. How do you manage your trade? So once you're into the trade, there's actually less analysis that you need to do. Okay. Once you've placed orders, all of that trade management now comes into picture. You have to first place orders. Sometimes you would want to keep pending or conditional orders. That means you want the price to go above certain levels, so you've kept a conditional order of a buy stop. Or if you've placed a stop loss, that means you've kept a sell stop at a certain level on a long position, and vice versa. Okay. So Zerodha is called I think stop loss orders, and in Sharekhan they are called conditional or pending orders. Okay. I call it pending orders because basically they're condition based. Okay. So all of that comes under now trade management. So this skill is also something that you have to develop. Okay. Whatever time frame you're working with, you have to manage your trades properly. You have to place your alerts, place your price levels, and place your conditional orders, so that whenever market goes and it goes into the condition that you have placed, your trade gets properly triggered. Okay. Now, of course, you have to use stop loss carefully as well. Generally, I prefer keeping a very mechanical and obvious stop loss on shorter time frames. Okay. And in positional trades, because I use fundamentally strong companies, I usually do not have a stop loss, personally speaking, because again, I have big time frames like 3 months, 6 months, sometimes 9 months as well. I don't really force the time frame on it. That's why I exit. But for shorter time frame, I definitely always have a very definite stop loss. And very important, again, for shorter term, I always keep a trailing stop loss. Okay. So trailing stop loss or even time exit, all of this you have to keep pre-planned. And that's why while placing the trade or before placing the trade, you should have a clear plan in your mind. Okay, how am I going to trade this security? Okay, for example, when I'm trading options, I recommend, and I also trade myself, I always use price based stop loss. Okay, 50% stop loss and 100% profit, because option pricing is very crazy and I don't follow option charts. I use the underlying as my reference point. But when I'm trading equities, I strictly use candlesticks and levels as my targets and stop loss. So what happens in those cases, whenever price is going towards, let's say, our target, okay, and in case with something that we just discussed, like a false breakout happens or a price suddenly turns, a trailing stop loss is something which keeps moving. In that case, even if you're in little bit of profit, that profit gets captured rather than losing whatever you've won for that day. Okay, so somewhere around 50%, 60%, or even sometimes at 80% levels, I will move my stop loss ahead to capture that movement. If I'm not very sure that the price will hit my pre-decided target or not. Okay, because again, market is a crazy place. You don't need to be crazy according to market. You need to have a clear plan that if this happens, this is what I'm going to do. And that's what trailing stop loss will help you do, to capture most of the profits if you're already in profit. Okay, so I always recommend, whenever your stock goes into profits, move your stop loss above your entry level, so that whatever happens, at least you take home some kind of money. Okay, and time exit is also, sometimes if you're trading in a shorter term, if you have a strictly intraday position, then you can obviously use time as an exit point, that I will exit this position in 1 hour, 2 hour. In case of options, I don't usually buy an option for more than 3 or 4 days, because then time decay is too much. So on and so forth. So all of this is something that you have to keep planned in your mind and then place your trade. Okay, and these are the skills that most people miss out on. Everybody can become very good at finding charts and patterns, and people spend very little time on placing proper orders. Okay, I'll give a very simple example. Most of us are trading using our phones. Okay, and on phones, trade management is not that easy. Okay, setting up level. So I recommend going into a computer, use a proper trading software. If you're going to be a professional trader, then use a professional setup, not 4 screens, but at least a laptop. Okay, so that way trade management, moving your levels, these days technology is also caught up very well. So if you're able to do that, then why not use of it completely to benefit you. Okay, and this is all part of your trade management, which is the final step and process. Okay, but having said that, I don't want you to think that you have to do too much. Okay, you have to do just a right amount of trade management. Okay, maybe a trailing stop loss, maybe a pending order, that's it, not too much. If you keep changing your trades all the time, then it's not a plan, it's basically panic. Okay, you're just emotionally reacting every time, and you're becoming just like market, and market rewards people who are stable, and market is going to be unstable. Okay, so don't tamper too much. If you can, you should automate your trades, as mean keep a predefined bracket or cover order, that's also fine. Okay, or at least keep a trailing stop loss, which on shorter time frame, most softwares will give you trailing stop loss as an option. Okay, and that's all you have to do. Don't do too much, because you might end up spoiling your trade as well. Okay, and of course, on a higher time frame, I don't do much. The less you do, the better results you get, is something which I recommend. The higher the time frame, the less trade management you have to do as well. Okay, so for peace of mind, positional traders, trade management would be probably just having that alert set up, so that whenever price hits a certain level, you can exit and probably book a profit, or exit in short losses, or whatever you have decided. Okay. Now, one more thing that you can obviously do as a part of trading management is increase or decrease position as your price goes. A simple example that I do is, I will usually buy stocks in 3 multiples of 3, so that every 30% of target that the stock hits, I will remove 1 position. Okay, so 30% target hit, sell 1 stock. 60 or 50% above, I'll sell the second stock, and then on final target, I can sell the second one. So this way, I'm capturing some kind of profits all the time, although this requires a little more trade management, and recently I've stopped doing this, but that's something that you guys can decide for yourself, that I want to exit at every 50%, I'm going to exit, so every 50% profit, I will close 2 of my positions, or something like that. Okay, all of that can be used. As long as you have a clear logic behind it, it should work perfectly well, but it should be predefined. Okay. Sometimes, of course, market goes very crazy and your conditions are completely thrown off. okay, or your pattern gets failed. So sometimes pattern failure, you will also have to switch your position exactly in the opposite direction. Although rare, I don't recommend messing too much, but there will be some very obvious conditions. If they come in front of you, you should be able to react accordingly as well. Okay, so this was your trading 5-step trading process. Okay, as mentioned, you can create your own plan and setup. It doesn't have to be exactly what the YouTuber or what the television people or what your book is saying. Okay, every method works. Some of them will work better than the others for those people. So choose your own method, keep it simple, and if you use this method again and again, you will have a trading method, you will have a business of trading as a career, as a side source of income as well. Okay, so I hope this was helpful to most of you who have attended, and you guys will utilize this knowledge. Alright guys, that's it for today. Just wanted to make a quick announcement. I have my 5-day traders training program that is going to start from Thursday, which is 5th of November. Okay, and it's going to go until 9th. Basically what I do is I'll give you recorded sessions in the morning via email along with exercises and some examples, and at night we'll be having live Zoom sessions where I'll be giving you practical explanation of all the exercises and doubt clearing. So this is going to happen for 5 days. You're going to learn charts, levels, candles, my continuation strategies, of course, and a very important, the 5th day, which is I'm going to cover trading psychology and money management, which is probably more important than all the other technical analysis that you can learn. Okay, so all of that I'll be taking that class from this coming Thursday to the 9th, and probably after this, in this year, that 5-day trading course is not going to happen. I'll be switching to a pre-recorded version. So if you want to learn live from me on Zoom, definitely look into signing up for it. The details of that I've already given in my top 3 ways seminar. At the end you will find the detail of that course. Currently there are 3 bonuses available. You'll get a futures and option course free with it. You'll also get my 20 recommended stocks that I recommend to my clients along with it, and you'll also get there is one more bonus. You'll also get a one-on-one training sessions with me. Okay, so all of that along with the 10 to 15 hour training that we'll be doing is together almost valued at somewhere around 17,000 rupees. But you can definitely make a very good you can take the offer right now, which is right now you can get it at 3,994. I'm running a discount till the next 3 days. Okay, it's a very fraction of a cost for the kind of learning that you'll be doing. Okay, but the idea is whatever you are learning, I would want you to earn from the markets. Okay, so your fees would be definitely taken care of. I'll make sure that I recommend those many stocks, and we find those patterns together, which will help you get your money back. Okay, I'll make sure as much as possible. No guarantees, but we'll try to do this because the last batch that we did, almost all of them hit profits. They had patterns that we had discovered during our class, and the patterns hit almost in a month's time. Okay, so if you guys are interested in learning, definitely you can DM me or you can contact me on WhatsApp. And alright then, good night everyone. I'll see you guys in my next video. Bye bye.